Hi there guys, hope you're all well. I don't want to make this introduction too long, so basically every Tuesday now moving forward I will be dropping a video lent towards beginners. So if you're at the start of your trading journey and you are trying to understand the basics, that's what the series that you're about to start watching is going to be about. So if you are interested in staying around every single Tuesday and Thursday for a video, subscribe to the channel and then keep an eye out. The first video is going to be on the most basic of it all, the very start of your journey. What is Forex? How can you make money from the market? What moves the market and how do we understand currency pairs and much more. So if you do enjoy the video guys, please like and subscribe. And as mentioned, every single Tuesday and Wednesday or Thursday, there is going to be a video. So let's get straight to it. So then people, if you are a beginner and you are still trying to understand the Forex market and that side of it, then this video is going to be for you. So what we're going to firstly go over is just the basics of what is Forex, okay? So Forex is short for foreign exchange, so that's the abbreviation for it, and it basically just refers to the global marketplace where currencies are traded against each other, and that is just how currency works around the world. So when we're trading the market, we will aim to buy or sell one currency against another, and we will aim to make money in the movement of that currency pair. So from Sunday evening to Friday evening, the market is open 24 hours, and then over the weekend from Friday evening until Sunday evening, the market is closed. So obviously you can treat it like a job, and there is obviously a lot of opportunity to trade the market. So when it comes to the market itself, the banks and the financial institutions are the main people who move the market. And as retail traders, which is like me and you who are obviously now in this video, we make up about 5 to 10% of the overall volume within the market. So that just shows you how much money goes through the market every single day. It's trillions. So us obviously trading, even if it's $1,000 a trade, that is nothing in comparison to what obviously the big players are putting through the markets. So let's understand by definition what the exchange rate is. So if you can look here, it's the value of one currency against another. So it gives a numerical value to convert one currency to the next. So this next example here will break that down for you. So as we've mentioned, a currency pair is what we will trade. That is made up of two currencies, and that just represents the change between the two. So for example, if you go on holiday, and let's say you are from the United Kingdom and you go to the euro, you will be looking at how many euros you can get per pound. So let's say, for argument's sake, you are looking at this currency here. It is made up of two sections. The first part of the currency pair will be the base currency, and the other will be the counter currency, like you can see here where the arrows are. So that's saying for every €1 in this example, how many pounds can you get? So it's like if you were to go, I don't know, to America from the UK, there is a currency pair and it would be the pound here versus the US dollar, which means for every £1 I get, how many US dollar can I get in return? And that is in super simple terms what a currency pair is. And it will be abbreviated. So EUR is Euro, GBP is Great British Pound, USD would be US dollar, AUD, Australian dollar, and so on and so forth. So how do we actually make money when it comes to these currency pairs? What can we take from the currency pair to potentially make money in the markets? So when we are trading, the main goal is to make money. So for a currency pair to move up, for example, euro, US dollar, for that to move up in price, that would have to mean that the euro is stronger than the dollar. And if euro USD was moving down, then that implies that the US dollar is stronger than the euro. So if we're looking at these here, picture it as a tug of war. Okay, so the market is in the middle. If euro is winning the tug of war, then it's obviously moving up. That would mean that euro is in control. If the second part of the currency pair is winning the tug of war, then it will pull it down. Okay? And that's as easy as it needs to be. So if you think if euro is stronger than pound, price goes up. If the second part of the pair is stronger than the first, it will move price down. Okay? So that is basically how we look to make money within the market, because if you was to buy euro US dollar, then you want euro to be stronger than the pound. If you were to sell euro US dollar, then you want obviously price to go down and US dollar to be stronger than the euro. Okay? So what moves a currency? So we know that the market moves up and down based on currency pairs, but why does this happen? And obviously over the series that you're about to see, you are going to understand more of this, but this is basically just the overview of what moves the market. So you've first got economic data. So if you're a trader, you may have seen the word economic calendar being thrown about. And this is basically just data releases for currencies. It might be the interest rate, it might be unemployment, it might be inflation. All these things which currencies report based off how they're dealing with things affects the market. Because if one currency is, if one country is performing better than another, then people are going to be putting more money into the better currency because it's a safer investment. That's the way you've got to see it. Where are people investing their money based on what's going on in the world? You've got market sentiment. This is like rumours. You've got the news events. You've got speculation. And this can cause currencies to move very aggressively. Now, this is only a difficult thing because sometimes the rumours do happen kind of straight away without surprise. So you can't obviously predict that. But the market is not about predicting. It's about reacting. So you may get a long-term move. For example, you had COVID. Gold was very bullish because it's a safe investment for investors when something's going on in the world. Okay? You've also got traders and tech, short for technical. And that is basically just the trading strategies that people who are in the market use. So everyone is obviously buying and selling. If there's more buyers in terms of the money amount, then price is going to go up. If there's more sellers in the money amount, price is going to push down. That's what it basically boils down to. Are the buyers in control or are the sellers in control? Okay? And then you've finally got global events, wars, national disasters, earthquakes, global tensions. Potentially, is someone going to go to war? Is there going to be, a tsunami, an earthquake, a hurricane? All these type of things have a large impact on certain countries due to how it will affect them. Okay? If there was a huge tidal wave, which this is very, very, very unlikely due to kind of how the world works, but if there was a huge tidal wave coming towards the UK, all investors are going to pull their money out of the pound because that country could be devastated from the result of the tsunami, okay? And they might put it into, the US dollar. What would happen if that was the case? Pound would go weak, US dollar would go very strong, so pound US dollar would drop because US dollar is winning the tug of war, okay? So what I'm going to do, I'm going to quickly go onto a currency pair which will be Euro US dollar, and I'm basically just going to break down how it works and what you can see by looking at them. So we are currently on Euro US dollar. We're on the 5-minute time frame. That doesn't really matter for now, but basically each of these candles represents 5 minutes. So every bar is 5 minutes, okay? What can we see based off this market? Euro US dollar is pushing down. And let me just change this to black. Euro US dollar is pushing down. Well, what does this mean? If we go back to the example of the two sides to the pair, if Euro US dollar is pushing down, then that means that the US dollar is the one that is in control. Okay? Easy as that. So what I will do, I'll just put that as red. So in this situation here, euro is weaker than the dollar. So the dollar is winning the tug of war and therefore price pushes down. Simple as that. If we look to the left hand side, you can see that price is pushing up. What does this mean? Well, if we go back to the exact same scenario of euro US dollar, that means that the euro is performing better than the US dollar. So when you're looking at the screen, that is all that matters, and that is how you can make money in the market. Obviously, in the upcoming episodes, you're about to see more on how to do this, but this is just the basics of what you need to do to potentially make money from the market. Okay, you've got price moving up, then the first currency needs to be more strong than the second. If price is moving down, then it's the other way around, and that is how you can make money within the market and what you need to happen to make money within the market. So that is episode 1, guys. We've gone over what is Forex and just understanding a little bit of the currency pairs. So if you came to this video and you obviously weren't too sure on the topic and you are brand new, then I'm hopeful that this video has been insightful for you and you've been able to benefit from it. The next video is most likely going to be on candlesticks, and a candlestick is basically every single one of these bars. So what we will do, we will break down what they are, how to use them, and what you can maybe look at when it comes to the market. So that's it for this video, guys. I will see you in the next one on Thursday, and then we also have the next educational one coming out on Tuesday.